Okay, like I said, you've got a trade idea. That's the why, that's the context. Let's call it a breakout. We can see this resistance, and we all want to break it out. So let's say we're a breakout strategy. That's our game. Now, the trade strategy is we ultimately want to benefit from a pattern that we can see time and time again. Okay? We need access as a trigger. It's telling us ultimately when should you buy this market, because we can see that the market's consolidating, we can see its resistance. But the problem as traders is what we do is we go, we'll buy it there, we'll puke it there, then we'll buy it there, and we'll puke it there, and we'll buy it there, and there, and there, and then the next thing we've lost 4 times in the same trade. Eventually it does that, we go and sit with our mentor and complain, oh, I bought it, I did the right thing, and I lost money. Well, no, you didn't have a bad idea. You had this one. You had a good idea, okay, but what you didn't have is you didn't have a good implementation. So rather than losing 4 times on it, okay, we can wait for a trigger that then tells us this is the time to go for it. Now, it's not to say just because you have a trigger that you're going to make money out of it, but I can tell you what, you're in a much stronger position when you use Axis than when you don't use Axis, because you're adding another layer of context. That's all it is. We see the breakout. That's context number 1. Now we see that a lot of people are lifting big offers ahead of the resistance zone. Now I've got another layer of objectivity. I've got another layer of context. If suddenly someone's buying a lot of volume just before a key resistance, I want to partake in that, particularly if I've seen that happen time and time and time again through my strategy characterization. That's the key. It's just adding a layer of context on top of another layer of context. And what that does is, it doesn't guarantee we're going to win, but it does give us a little bit more of an edge on the guy that's just buying it there and selling it there and buying it there. Edge on top of edge on top of edge. Okay, now let's give you a few examples. Now, like I said to you, there's a number of different access methodology to give the illustration, to give you a basic understanding of it. I love bullish engulfing candles. Why? Because they, in effect, show us a very aggressive type of price action. Okay, now, note, when I talk about a bullish engulfing, it's not just this one engulfing this one. That's, again, a little bit of an oversimplified way to look at it. What I need to see is I want to see a lot of volume in that one, because if I see the market going down and there's a significant price change and there's a lot of volume, it tells me that sellers have come in, they've sold into a bid. Okay, because the only way that they could get the market down and do a lot of volume is that someone is providing liquidity on the way down. For it to then reverse and do the opposite on high volume, it's telling me that a buyer stepped in, and not only did he absorb all of the liquidity on the way down, but he's now taking all of the liquidity being provided on the way up. Now, we can all agree that basic story I've just explained to you sounds pretty bullish to me. It sounds like there's a lot of buying in the market. And that's what an engulfing candle is. It's telling me about a piece of price action. Now, all I want to do is I want to take this piece of price action and I want to merge it with a context that makes sense to me. Because if I can see this repeatable piece of price action with a specific strategy, I think I've got a pretty good chance of winning. Okay? And that's what Axis methodology is. So what you can see here, very important, with your Axis candles, it's got to be precise. Now, very important for this Axis to work, you need 2 important things. Okay? And again, this is from my experience of dealing with engulfing candles as Axis structures. 1, you need volume. Okay? So you need this thing to be quite high, relatively speaking. Okay? Why? Because remember what I said to you. An engulfing candle, ultimately, I want to see the sellers on the way down, and I want to see them selling into a hard bid, and then equally, I want to see those buyers lifting big offers on the way up. So I need to see volume. Otherwise, what have I got? Well, I've just got a candle. Okay? 2, I also want to see on the engulfing side of things, I want to see that delta accumulate. Okay? In other words, what I want to see is as that market reverses and starts to engulf, I really want to see big offers being lifted, because what that tells me is there are now potential shorts that are trapped into the market. And again, when I say potential shorts, I'm not talking about big institutions. I'm talking about some maybe people that are bid offering spreads, maybe some people that are doing automated type strategies looking for small incremental moves. In other words, the short-term positioning is to the downside. Okay, so that little trap that's been laid is what's going to give me that impulse move to the upside. Right? That's why I want to see, for me as an axis, I want to see high volume and I also want to see delta, because that then confirms the power of the axis. Now, very important when developing this axis methodology, you've got to be precise, because as you'll see when I get to part 4, if you're precise, you get to do something like this with red dots and triangles and dots and threes. And all that is that specific axis being signaled to me. Now, if I have a breakout and I have a number 3 ahead of the breakout, what is that telling me? It's telling me, Brannigan, don't think the axis is there for you, just buy the market. Now, if I'm being told what to do as a trader, is my monkey brain going to intervene at any point? Of course not. Am I objective? Of course I am. Where do I place the stop? Well, I know when the number 3 exists, I know where the stop is, because I'm following a predetermined trade plan. Okay, now, I'm not going to take you through this chart. I just want you to start to understand why we're using axis. Okay, we use it to align with the context so that we can time certain trades, so that we put the odds of a favorable outcome. That's what it comes down to at the end of the day. We want to just improve the odds, and we use axis to improve the odds.